Jump over to ANET. So ANET's interesting. There are two different tracks here that we just have to show right now. Right now, I'm leaning towards this being the more dominant track, this red one here. Okay, just so that's clear, because we have a curl down in the RS on the weekly. There's a trough due, but what I wanted to highlight just for a second here are these more dominant patterns. Okay, these are the things that can really help you. First, you saw this move up, clear diamond, that form. That's why I've highlighted this in blue. After that, a clear bull flag. This is what I want you to see on the weekly, because that can help you say, what side of the market do I want to be on? Do I want to be trying to have every little move up shorted and then not catch that? No, I want to see the flag. What about after that? Sideways consolidation, right? Breakout, retest, turn up. Interesting. And then what happened? Oops. Then what happened after that? Move up out of that downtrend, retest right here again on earnings, and then we were off to the races. What happened after that? Bull flag, and then we were off to the races. After this, diamond. Look at these clear patterns that are setting up right now. This is looking like it's going to form a bull flag, so that's what I am focusing on. I am not trying to really be short ANET. I'm actually just watching for a long opportunity, because that looks like, based on the overall cycle structure, there's a bullish right-hand translation that looks like a good shot. So we'll be looking for this to curl its way back to the upside off of that low. But right now, the more dominant track, just to make sure this is clear, and the one that I think is higher probability, is the one in red. So I'm just going to make that more faint and make this more bold, so you can see this is what's, I think, really in play right now. But this is a bull flag, so it's going to draw it out. So, this is what I'm watching for. I'm watching for this to be a bull flag. This is how this underlying likes to trade. In the overall construct of this long-term uptrend, you can see how it also likes to hold that 34-week in blue right here, right here, almost to the tick, right there, right there. When you're in an uptrend, you see how it's holding that 34. Where is that 34? Right around 99.79. Let's zoom in a little bit. 105 to 96 or 96.80-ish is the fib zone. So it's all right around that same area. So if this can sell off to right around that 34-week moving average, and we start to see, in the short term, some better action. So where is that again? That's right around 90, let's just say 100. Okay. So let's be watching this black track on the downside. That would be right around the $100 level. That seems to be in play, because we're seeing weakness, right? The RS is now curling down. We are seeing just a very flat ribbon. So let's see if that can get more in parallel. Again, visualize this on the downside. The EMAs go in parallel on the downside, and you see price action down towards that low. And then if we can see a curl back up in the RS, so let's visualize the action in the RS. Let's say we see price, a move down in the RS daily, and then it starts to bottom, and then it starts to turn green here. That will tell you, okay, that next move is underway, right? So just visualize this. So much of trading is just visualizing your setups and then watching them play out, and that will give you that confidence to go after those, right? But have that plan in advance. What are you looking for in the indicators? What are you looking for in terms of timing? What are you looking for in terms of your signals to actually get involved? What does that mean in terms of your risk? What does that mean in terms of what you're looking for on the upside, right? Think about all that. But this looks like a solid opportunity coming here into this low, and that low is right on 310 to 321. Now, what would improve the pattern? Well, we'd have to see this RS curl its way back green again, and go back to my usual color here. And I'm going to be watching then for that green track. If this is going to form a key low, you would see on the short term a higher low form, right, versus this low. So just have to watch. To see. But right now, the odds are favoring a move back down towards that low. And then I'm going to be watching, as I said, for the RS to really give that guide. Just like, this is not a great case, but let's see if we can go back. Even just like here. See how the RS curled its way back up when green? You caught a little bit there, did have a little test down, but turn back up. There are going to be swing opportunities here. Let's go back to a weekly because these aren't actual, you know, dominant troughs. So it's, you're going to get more noise off of dominant troughs. These things go like you can see right here, turn down, curling in the RS, and then when it turned green, it was on earnings. But look at the change in character post earnings, sideways move and basically straight up. So just use the RS to help you. This was just FYI, right here was right here. That was that key weekly low. That was our last key weekly low, which is what I think is why it's so key just to understand the weekly. And I have found it most helpful to just be, really only looking long off of those key troughs. I always ask when are the odds really stacked in my favor? When I see price action like this, get out, get out, get out, get out, and then I see the RS curling back up, I'm saying this is a trap, right? Get involved, right? This is your opportunity. And you can see the magnitude of these moves, right? I mean, these are huge moves. And this isn't by accident. This is what happens. Obviously, the actual raw move will be different from symbol to symbol, but the odds off of troughs are the best. And that is what I've seen over now coming up on almost, 14, 15 years of doing this work over and over again, tens of thousands of symbols. That is where you build your own confidence in your setups. And for me, it's off of weekly troughs. And beyond that, randomness increases as you go out, as I've said for years, as you go out further in a rising phase, randomness increases. What does that mean? That means in the short term, as we go out, you see more moves like this where it goes up and then sharp down, right? So you have to be a little bit faster on the trigger to actually get out of your plays. Again, these are all just generalizations, right? But that is what happens over time is that randomness increases in terms of that short-term price action. When is there the most calculated moment to be involved in underlyings? It's off of both weekly and daily troughs. And if you're using the indicators to help you with timing, it can give you confirmation so you have the wind at your back. It isn't just, simply buying weakness. It's waiting for that low to form, waiting for, even on 2-hour charts, waiting for a turn up in the RS to really say that this move may be underway here. Watch it closely, and that can help you with timing. Okay, so this is just a wonderful chart, and thank you for that question.